We are at an all-time high when it comes to credit card rates. They now average above 20%. Unfortunately, with rising mortgage and auto loan rates, as well as increasing student loan costs, these expensive credit cards aren't the only financial problem Americans are facing. Today, we're going to dive into what's been happening to borrowing costs and how you can stay ahead of the game with your spending. Let's start with the most obvious one: credit card rates. As the Federal Reserve raises the interest rate, variable credit card rates follow suit, and we're already at an average above 20%. The rise in credit card debt from month to month is also skyrocketing. So now is the time for cardholders to pay attention to their rates and save money wherever possible. The same applies to mortgages, which now average around 6.5%. The higher rate means less purchasing power for those entering the housing market and makes it hard to break in. There are options, however. Adjustable rate mortgages and home equity lines of credit follow the prime rate and allow you to save money relative to what you'd pay with a fixed-rate mortgage. Auto loan rates also rose to over 6.5%, making it harder to keep up with the higher payments needed. That's due to inflation and the Fed's policy moves inflating the amount one pays for a car. Next are federal student loans, which are currently just under 5%. The interest on them, until the government's payment pause ends, remain at 0%, but those taken out for the 2022 to 23 school year will be at 4.99% and may even get higher. Private student loans are also on the rise because they are tied to the LIBOR, prime, or Treasury bill rates and are subject to rate hikes when the Fed increases the federal funds rate. Finally, deposit rates at some banks have increased to a good 4.5% or so. While the Fed has no direct control on these, they do tend to be correlated with the target federal funds rate. All in all, it's clear that borrowing costs are on an upswing, and with the Fed's rate hikes, it only looks to get more expensive from here. But don't worry, if you shift to a higher yield savings account, there's still hope. So stay tuned and financially savvy.